You're still watching Metropole Television. This is Business M. My name is Simba Elijah Charles. Can I get let's cross over to the issues that we have for you this morning, where remittances from Kenyans living abroad dipped in September to their lowest level since May to 28.3 billion shillings. But according to new data from the Central Bank of Kenya, remittance inflows in September denoted an annual 21.4% of growth compared to 23.3 billion shillings netted in September 2019. This was, however, a 4.8% month-on-month drop compared to remittance inflows recorded in August, which stood at 29.7 billion shillings. Now, the cumulative inflows in the 12 months to September rose by 6.5% to 323 billion shillings. Now, this is compared to 303.3 billion shillings in the 12 months to September 2019. According to CBK, the United States of America remains the largest source of remittance inflows to Kenya, recording a growth of 25.2% in the year to September. Now, despite the month-on-month drop in inflows into the country, there seems to be a general improvement in the figures from 2019. Question being that we would expect that the coronavirus pandemic would hugely affect the inflows into the country, but seems as if it has not. This morning, to help us understand this issue, we're joined by Diaspora, the CEO, Elema Capital, and Johnson Derry, economic analyst. All right, let's look at that data therefore before we bring in the two gentlemen to help us paint a clear outlook for the remittances into the country. We can actually say that all the way from January to where we are right now, and I want you to look at the period between March up to where we are right now. That's the last data that we have for you. You will see that January, you will actually say it has been on an increase, which therefore begs the question, why aren't we talking about a big dip? Because even in the US, they're talking about another economic stimulus package, which is not coming anytime soon. Let me bring in Johnson Derry on this. Why don't we have a big dip in our flows into the country?
That's because, especially because most of our money is coming from the US.
Yes.
US is an interesting economy because money there has pretty much been made very cheap. So people can easily fund on basis of borrowings.
Yes.
And borrowings may not necessarily depend on economic activity.
Yes.
So if government policy is to increase money supply, just to stimulate the economy, then you'll have access to funding. And in some cases, it's been, in addition to the access to funding, you've got the checks that were posted to Americans generally as part of fiscal stimulus. So all that, when you put it together, you can see why the levels are maintained, because some people even got more resources than they usually had.
Yes.
When they were working.
Yes. All right, Johnson, just before I let you go on that as well, as I also get the sentiment of the CEO, LM Capital, this morning, regardless of exactly what we're talking about, because if you look at exactly what we're talking about, that if you look at where we are, it's a dip of 28.3 billion shillings. But now, if you go back to 2019, it will be a jump. Is that we're recording better figures than we were recording at this same period last year. Does it also beg you to ask the same question? Why? We will be talking about the worst figures now.
Again, look at the Federal Reserve balance sheet.
Yes.
The jump is astronomical. The other indicator that will tell you how much money supply has been pumped into the system is the price of gold.
Yes.
Look at that now versus what it was, this time last year, and you'll see why there's still seemingly so much resources available with regards to remittances.
Pretty much. I'm going to come back on with you on that, on exactly what that means for the economy, because the CBK has written on that, and they've actually said something with the latest revision of our economic chances this year, which they put at 3.5%. Just on a hold on that, let me bring in Odembo Ramogi this morning. Yes, it looks good. Why?
Sorry, you were breaking at some point there, so I wasn't sure I'm the one you're referring to.
Yes,
But
it's you, sir.
thank
How
you.
are you doing?
Well, remittances say a lot about the host or the source country.
Yes.
I'm good, I'm good. Remittances say more about the source country than they do about the recipient country. What this means, therefore, is that the money supply in the West is higher than it is here locally. I mean, the economy, they have managed much better during lockdown, after lockdown, and even right now, as we are talking about recovery, they have managed it much better than we have. Because our money supply has dipped and theirs has improved, as Johnson has mentioned. And so it's neither good news nor bad news. It's just there. It's news. It doesn't make me wake up feeling much better, so to
Yes.
speak,
Yes.
because yes, the money has come, but it is very. It's not the kind of money you're going to say that will really create an impact in our economy.
Yes. Yes, let me just get also your 2 cents on that as well. I mean, when we're talking about US being one of the biggest contributor of our inflows into the country, we don't know what's going on there right now. They're going into an election pretty much in just under a week, and they're talking about the third economic stimulus package, which is neither here nor there. And I don't think now we're going to talk about the package. It's going to be even after the election. So do we expect that these figures would remain the same, or well, are they going to drop?
You see, with money supply, what you expect is that there will be some savings. The savings will create investment. Investment will create employment. And so
Yes.
there are more employment opportunities that are coming forward.
Yes.
And this employment will further create income. Income creates savings. And so it's a circle. And what you expect that now out of all that circle, there's wealth creation and there's improvement of the situation, economic situation. And so whether or not, and the West is generally resilient to elections, and even significant African countries today are more resilient to elections than before. So that elections are just one of those things, calendar events, and not necessarily going to affect how the economy performs or doesn't perform. And so the elections are neither here nor there in terms of the economic performance. As to whether the stimulus package will wait until after the elections, I'm not sure I want to bet my money on that. Because really the way these established governments work is people can vote while significant happenings are happening elsewhere.
Pretty much. Let me just bring in Johnson there for this morning. Johnson, well, Ramogi says, well, it's just money is coming in. But the Central Bank of Kenya, Governor Dr. Patrick Njoroge, in his latest revision of economic chances this year, which he put at 3.5%, said, well, I've got proper indicators that actually make me bullish about our chances. He said, well, if you look at our exports, they've been improving. He also mentioned our remittances, which is also coming in, which is also now being proven by this data that we have this morning. Is it significant enough for us to peg that to our economic growth this year?
Certainly, the Kenya's economic performance in 2020 should have been better. I mean, would have been worse. I mean, people expected worse. But you know, we got a break. I think what Kenya has done a little differently than many other countries is we've not tightly shut down. So you've got other countries globally that, because of their shutdowns, they talk about a dip in annual 12% GDP annualized. So we didn't do that here. So when you look at indicators, you've mentioned remittances. I wouldn't put too much of a premium on that. An indicator I like to look at is the market Stanbic purchasing manager index, which is positive. You know, when it goes above 50 50 is positive. I can't remember the last reading, but it's certainly expansionary. And for me, if you look at that index over the last, since January, you can argue that there is reason to be optimistic about Kenya's economic performance in 2020.
Yes. All right, Ramogi, let me just bring you on this so we can also weigh in on this as well, because I really want us to paint a clear picture of this trend that we're seeing in 2020 as well. Well, it seems as if the coronavirus pandemic is not ending soon. I mean, we're talking about the biggest increases even in terms of the coronavirus cases in the US alone, where we're talking about them even thinking about should they get into another wave of unprecedented measures in the economy. That is an indicator that they might drop as the year progresses.
Sorry, I don't know if you are referring to me or Johnson.
Just you, yes.
Apologies, I didn't hear you there. We are all hoping that these figures will go down. And because if they go down, that means then the possibility of a lockdown is not there, whether it's in Kenya or in these other countries. And I just wanted to mention on what Johnson was talking about, the growth figures annualized. I think I have pretty much been observant on the quarterly figures, and because they are more indicative of where we were at any given time. And the second quarter was the worst hit at negative 5.7. We are looking at a recovery in the third quarter, and a much better performance in the final quarter where we are in right now. And so I don't think, I agree with him. I don't think we can attribute that to God bless the CBK governor, but I don't think we can attribute it to remittances. I think the first fact is that we never really locked down. But the second part also is that there's been a lot of reprieve from government for those in business and for corporates. Whether this will continue to be the case or not, it's a matter of prayers, man, and it's a matter of hoping that the health issues will be handled in a better way.
Pretty much, gentlemen, I beg that we move into the next issue this morning, where KCB Group PLC has been rated #1 in Eastern Africa and emerged in the top 10 among African banks in the 2020 Bankers Top 1000 World Banks. In a poll that analyzed close to 2,000 financial institutions globally, KCB was ranked in key parameters such as liquidity, coming at position 10, position 3 for growth, 9 for profitability, 8 for operational efficiency, and position 10 for soundness. On a global scale, the bank has been ranked at position 667, climbing up 40 places. Now, the bank's improved ranking has been attributed to a strong capital base, solid business performance, and a well-established corporate and retail franchise. Now, speaking on KCB's latest ranking, KCB Group CEO and MD Joshua Igara says that while the 2020 ranking shows that the stabilization in the finances of majority of the African major lenders, the survey shows that the COVID-19 pandemic has hit banks significantly and will take a toll on lenders in key African markets such as South Africa and Nigeria through the coming year. In its 2020 half-year financials, KCB's total assets grew by 28% to 953.1 billion shillings, as its net loans and advances grew 17% to close the period at 551.9 billion. Customer deposits held by KCB were up 35% to 758.2 billion shillings. So let's take a look at some of the selected performance indicators of the banking sector as we do all of it now. And we're looking at this period from January all the way through April, and that's when we did know that the effect of the coronavirus pandemic has really grabbed the economy. And if you look at what we're talking about in terms of total liquidity, I mean, they have been doing fine, because if it's at 49% in January and went all the way to 51.2%, and you can actually have talking points from there. It could be just the reduced cash reserve ratio that sort of saw us jump to that. But even as you argue about that, you actually actually even say the profit before tax generally in our commercial banks in the country has been healthy as well, because we're talking about 13.2% in January, which goes all the way to 45.3% in April, which therefore begs the question, yes, they look okay. And Odhiambo, I want to ask you this morning, if KCB is now ranking really that good in Africa, is it the same picture for the smaller banks in the country? Because as we do know, this is a big boy in the economy. Unfortunately, we seem to have lost Odhiambo Ramogi at that. I beg we take a short break, we fix this connection and come back and continue with Business AM this morning. Again, sorry for that little technical hitch. We've already fixed it. We'll start with Odhiambo Ramogi, the CEO, LM Capital, as we want to understand what the effects of the coronavirus pandemic really have been on the banking industry as at large. All right, let's look at that data again this morning as we argue our point on exactly what the effect has been. Now, if you look at the selected all the key performance indicators for majority of the commercial banks in the country, you will say yes. I mean, if you look at even total liquidity, which even as back as January, that's when we started with the effects of the coronavirus pandemic, you will say they were fine, 49.8%. All the way to April, stood at 51.2%, way well above the 40% recommended ratio by the CBK. And then you look at profit before tax, it's also healthy, because even in April, that's when we had them jump to 45.3%, regardless of the fact that majority of the profitability margins were hit as a result of the massive provisioning that we did see occur as a result of the coronavirus pandemic. Fine. KCB is ranking really good in Africa, and across the world, we do know now it ranks at 667 and it's climbed 40 places. Odhiambo, would you say therefore that, well, this number just goes to show you what the effect of the coronavirus pandemic has been across the banking industry in the world? Because even as they lead locally in terms of provisioning for the non-performing loans, it pretty much shows you that they're also climbing up places, which, what sort of indication is that?
Excellence. I want to believe that they are not taking advantage of coronavirus casualties.
Yes.
And so they are climbing up the ladder is not merely because the others have fallen casualty
Yes.
to the pandemic, but that they are rising up the ladder is courtesy of their own excellence, courtesy of their own management, good management.
Yes.
And I want to also believe that I think when you look at the history of KCB, they have had some rough times, but of late there have been some very good management. And this started with Michael Otieno and now even Joshua. And so for me, it's congratulations to them. Now, what is the effect? I think you had asked two questions, so let me try and answer them separately. What is the effect of the COVID-19 pandemic on the local banks, particularly, and banks generally at the global level?
Yes.
Locally, I don't think it has been extreme. I haven't heard of banks that are illiquid anymore or delinquent, as it were. Sorry, we've seen some very good financial management. We've seen some very good risk management within the banks. And I think there's also been some sort of cushioning from the government in terms of some of the monies, the economic stimulus package money have been divested towards some of these banks. And so while, yes, there have been businesses that are affected and are not able to pay in the immediate, I think these have not been declared as bad loans in the books, and this has made the banks to fairly perform well. But you know, some of these data will come in in earnest somewhere end of this year and early next year,
Yes.
that's when we'll know what's really in store for us in the banking sector.
I want to ask you this question as well. I mean, what we're talking about the local banking industry is the massive provisioning for non-performing loans. Okay, but from what you said this morning, what would not make you classify that non-performing loan as a bad loan? Because essentially, you're not so sure they're going to come back if we're talking about the effects of the coronavirus pandemic. So which would actually even improve then the NPL's book to around 50% if you look at the numbers.
Certainly. You see, the allocation of the non-performing loans reserve,
yes,
is a risk management strategy.
Yes.
And it follows the risks in the market. Now, if the risks in the market increase, it is expected that prudent financial management or prudent banking would expect that you increase this reserve.
Yes.
If the risks reduce, then you have more room to play around with this money and reduce it and perhaps lend out this money. As it were, right now, Mr. Simba, do you think the risks have reduced?
They haven't reduced yet, isn't it?
The risks are there. The risks are still there because a number of these banks lend to SMEs.
Yes.
And SMEs have been significantly affected by the coronavirus, from transport to bars and restaurants to people selling clothes. They're all affected in one way or another.
Yes.
And so the risks are higher. It behooves the banks to increase the provision for bad loans.
All right, now, but talk to me about the smaller banks. I mean, because, well, this headline is about KCB. I mean, they're the biggest lender by assets, fine, that they would have a capital base to fight whatever risk they have. But talk to me about the lower tier banks. Do you think that they share the same, I would say, the same environment that KCB shares with going by the regulatory environment in the country, and you have a man up there saying, I don't need so many banks in the country now? Do you think that the COVID-19 pandemic has exposed them really bad? And when are we going to see that?
Like I said, there has been a lot of action from the government that I'm hoping that will result in some, strengthening of some of these banks.
Yes.
But are the risks higher for them? I think so. The risks are much higher for them. One, because they do not have a lot of money at their disposal, as it were, to lend out. And so they do not have a lot of capital to put in form of provision for bad debts. And so they are more exposed. What will happen, however, is when when they feel the heat, I would expect that there will be mergers, there will be acquisitions. I'd expect that there will be declaration to that effect that, look, we are not doing so well. I haven't seen a lot of it in the past few months, which means either the data has not come in or they are still in a good position. You'd remember that the lockdown was 3 months or 4 months or so. And so you can manage perhaps within a 3-month period, because even at that time, not too many people were borrowing. A lot of people were indoors, so they did not need to be too liquid, as it were. But right now, as we are recovering, now is when they'll know how their books look like. And that's when we'll get to know whether are they surviving this COVID-19 pandemic, or they need to consider options of mergers and acquisition.
Pretty much. CEO, LM Capital, Diaspora Ramogi, thank you very much for joining us this morning on Business AM.
Thank you, Simba. Always a pleasure.
It's like a short break. Once we come back, the question is, what do companies need during this COVID-19 pandemic? A conversation coming up. Good morning.